Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for Tuesday, June 27th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. So far, the ES continues to trade near the center of this range. Every time we get a little bit outside the range again, price comes right back toward the mean and continues to trade around the 2434s or 2436s. 36s being the FOMC key level from June 14th. And again, this is what I mentioned before. There's no real edge in here right now. So it makes swing trading very difficult, and it makes intraday trading difficult as well because you don't have very clear edges to trade against as we're chopping right around the center. So you have to be very careful about where you engage the ES. So nothing really to do right now. Again, if price were to rotate downward toward the lower edge of the range, it could be a great buying opportunity to bring it back up. But right now we haven't been seeing much action out of the ES. So right now, just kind of a wait and see type of pattern. If we drop down to the intraday time frame and break this down a little bit, what you'll notice here is price has dropped down back toward 2430 and found support. Again, 2428 to 2430 has been a very reliable band of support at the lower edge of the range, and likewise at the upper edge we've been seeing price attempt to push the new highs up here but come right back down. Mainly price has stayed between 40 and 39, somewhere in that zone. So between 28 and 30 has been an area of support, between 40 and 39 has been an area of resistance, and right now those two edges are fadeable. You can see kind of the D-shaped profile that's been trading out here. So if we were to come down here into 28, 29, it could be a great fade back toward 34, 35. Likewise, if price were to get up here into 40s, it could be a fade back down. But right now, that's about all we have to trade against. Let's take a look at crude oil. Crude has had a nice little rally here in the short term at the very least. We've had a significant decline that has been relentless to the downside. The previous session we had a great short-term opportunity here where price faded off 43.35s and dropped down toward these lows. However, things changed intraday once price failed to push to a new low and instead rallied back toward highs. That was the point here in the trading room where we switched our bias from looking to a downside move to perhaps watching for rejection of this lower edge and perhaps a bounce now. So right now, this is where crude oil may begin to stage a comeback as we are now approaching and testing that 43.75 to 44 zone. Again, this is the bottom of the key range, and what I mentioned before, once we get outside this range, this is when we may begin to see some sort of rejection of these prices, and if so, that would lead to a bounce back toward 48.75 and even 49 evens, as it is the midpoint of the key range. So that's what could be ahead if price can continue to hold above 43.75. That's going to be a key level perhaps for a couple of days, but right now that's what's in play. Not guaranteed just yet. We're still in a downtrending market with the potential to see rejection and continuation, but right now 43.40, 43.35 is kind of the intraday pivot, and 43.75 is the major pivot to watch for signs of rejection. So again, nothing significant here just yet, but you can see that yesterday was the first day in about 5 weeks where we did not take the ball. The bears did not take the ball and run with it after rejecting those previous highs, and that is something to pay attention to because it means bulls are likely coming in, and that could be the fade effect back toward 48.75 to 49. So something to watch as we head into the rest of the week. Continue to watch that 43.75. On an intraday basis, you'll notice that price has been trending higher. Very nice organized uptrending market here. Very clear trending market underway. Here's the 43.60s, which is a nice little pivot in the charts. Should price return back toward 43.60 to 43.50, that could be an opportunity for bulls to defend and bring back toward 44. So right now, pullbacks are buying opportunities within the uptrending market, and 43.75 is going to be the major pivot to watch for directional bias. All right, let's take a look right now at the NQ. The NQ perhaps was The weakest of the bunch, the previous session, very significant selling pressure that came into view, and I think that rolled into the rest of the market for the most part, with the ES following behind it to some degree. And this was upon rejecting the 58.50. I kind of mentioned this before, that bull's last line of defense was trying to reject these lows here and keep these late longs trapped, and that occurred off 58.50. And when that level was hit, it was a quick rejection and drop, and it kind of came out of nowhere, it seems like. But once price was able to reject prices above 58.15, it was kind of a steady continuation lower. And so that's what we've seen. We saw price reject the 5800s to 58.15s, and we're seeing a little bit of a pullback. But what I mentioned before was, even if we see a pullback, these pullbacks have been defended. So right now it's just another pullback. We're back in the trigger zone and a stacked and sloped environment with the PIMAs. So still, even with this recent pullback, I believe bulls still have the upper hand here to look to defend and try to squeeze, but there's no clear area to engage, and that's the frustrating part. So right now we're kind of stuck inside this range. No great trade location, but one key level to watch is going to be that 57.63 half. That's kind of the pivot here to watch. That's going to be the FOMC key level from June 14th. That's going to be the level to watch for directional bias, but right now, again, no cleared away actionable trades on a swing basis just yet. If we look at the intraday time frame, right now we've kind of pushed back off the previous session's highs. Nice rejection here off the 58.05s. Previous week's close, that drop price. Previous session's close also offered, and now we're kind of consolidating at these lows. So again, the 57.63 half, very important. Above that level, returns price back toward 5-day VPOC, 57.87s. Failure to get above 63s continues to hunt lower for support. All right, lastly, let's take a look at silver. Here's the higher time frame of silver. Nice rejection the previous session and new lows, kind of a stop run wipeout where price wiped out 3 days of lows and then closed back within that range. Now you see bulls defending the midpoint of the previous session's range. This is all happening at the lower edge of this trading range here, where we've seen support time and time again off the 16s. Every time price gets here, there's varying degrees of success with these bounces. So right now, this could be another opportunity here where if price starts to push above 1675, there could be a retest back toward composite VPOC at 1727. So right now, this here could be the initial framework for what becomes a squeeze back towards 1727 to 1760. Obviously, support down below at 16 is still in effect, but right now, it's developing situation that could eventually lead to that bounce. So we'll continue to watch this very closely and keep an eye on 1675. All right, that's it for now. Let's see how this plays out the rest of the session. Good luck and trade well.